Gold, as we discussed last week as well, it has pierced through this level of support. So first of all, we broke down through 1140, 1,140 US dollars was the low, which you can see clearly here going back to October on the chart and also going back to March 2015. So we pierced that low yesterday. We closed just about above it. Now, today so far, we've broken down to 1,125 US dollars per ounce. So again, if you were going to short gold or silver, gold was the better market to short and take advantage of. Where are the next levels of major support? Okay, so the next major levels here are 1,116 US dollars. That would be another level which I would look out for. But I'm also looking for any evidence that we're going to get a spike low from the price action that we've had this morning as well. So I am keeping an eye. Look at 1 hour, 4 hour, just look to see if we get any sort of spike low and evidence that a low is getting put in place, because this time last year was the day after the FOMC statement that the low was put in, and then we rallied after that point. So I'm watching this very carefully today to see whether we'll see big buying around the current zones. Gold right now, it's broken down to 1,125 US dollars per ounce. If we continue this move lower, we could be in for a move all the way down to approximately 1,100. I mean, we're not too far away from it now. It's only a $30 move, 300-point move. It's certainly within the realm of possibility here. And if you're selling short, what you want to do is just continue to trail down your stop loss as you continue to take advantage of the selling pressure on this market. The US dollar has broken out to 14-year highs, but is it going to be a blow off top? It's very overbought, the US dollar. Is this just going to be a reaction to yesterday's Fed statement and the potential for 3 interest rate hikes next year? Or is this going to put in some sort of a top? Again, what happens today is important. Are we just going to see a faded rally here like we got with oil last week, where we saw, or on the open certainly, where we broke out to the upside and we've had a sell-off throughout most of this week? We want to just keep an eye on this candle today. Is it going to be a fake break to the upside? It looks good at the moment. It's still following through, but this could change. If we see a big rejection candle forming to the close, or an indecision candle, or doji, which would be the price opening and closing at a similar level, yes, that sort of shows us that the bulls are running out of steam here. Now, as we mentioned last week, yes, to a certain degree, the interest rate hike, a lot of that was priced into the dollar. What wasn't priced in was the Fed to come out with a statement that they would be looking for potentially going ahead with 3 interest rate hikes next year as opposed to 2. Hence the surge in the US dollar. How much follow through will we get is the big question. So gold right now, levels, we've got 1125 is the daily low, 1140 we've obviously breached below. Now we've had a break below that zone, and yes, absolutely, we closed and broke below the 1150 zone, which was also an important level for gold here. So right now it's looking quite weak. Certainly the bears are in control here at the moment, and you can see gold and silver, they're both trying to find a spike low, but they're not really getting there yet. We're not getting that big capitulation in this market yet that you would often look to get when you form a spike low. But then we'll be watching this very carefully tomorrow. So again, just going back to last year and the FOMC statement where we had a breakdown, and the following day, that was the low. That was the low we put in. We got a retracement the following day, consolidated throughout December, and then the big moves really happened in January. So watching this level, and it does have the markings of a V-shaped reversal pattern at the moment, but we'll see. We'll see whether this holds or not. So watching that carefully for that.